Today, we're diving into the latest on SoFi, breaking down recent data points, analyzing market behavior, and giving you all the insights you need. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi has had a roller coaster of a day, currently down 3%. It peaked at $8.06 and dipped to $7.56. From the market's opening, things seemed off, which regular viewers might have noticed due to the subtle market nuances we often discuss here. There were conflicting forces at play: algorithmic trading pushing the price up, short sellers covering their positions, and institutions offloading shares. This mix caused the stock to be more volatile than usual. At present, SoFi is trading with a high volume of 40.6 million shares compared to its average of 35.4 million. We're seeing significant transactions in the secondary market, particularly those exceeding $100,000. These large trades, mostly happening early in the day, were dominated by selling activity. Institutions offloaded shares, and shorts started covering their positions, possibly out of a sense of urgency or defeat. Over the last month, SoFi stock has seen a substantial rise, up 16.72%, with a 6% increase over the past 5 days. Shorts have been losing money as the stock climbed, leading to a net return of 183,000 shares, with 17.46% of the free float being shorted. The cost to borrow remains negative, a trend that has persisted since the Consumer Price Index (CPI) data was released. Despite today's dip, SoFi's broader picture looks strong. The market has absorbed several data points, including initial jobless claims coming in higher than expected. This data hasn't drastically changed the market's expectations for interest rate cuts, which remain likely in the upcoming Federal Reserve meetings. The odds for a 25 basis point cut in September stand at 93.5%, and November's likelihood of another cut is at 59.7%. Today's market performance is overall down, with the Nasdaq and S&P 500 both dropping around 0.9%. This decline follows a significant rally over the past few weeks, suggesting we're in for more volatility. Shorts might seize this opportunity to increase their positions, given the market's current state. Interestingly, SoFi received a new buy rating from Jefferies, although no specific price target was set. This indicates growing analyst interest, likely spurred by SoFi's recent performance. The stock's rise has garnered attention from investors previously uninvolved with SoFi. Now, let's talk about SoFi's technicals and options activity. There's a significant amount of money flowing into SoFi through options, with $9.99 million in calls and $1.47 million in puts. Algorithmic trading in shorts are driving much of today's volume, a trend familiar to our regular viewers. While algorithmic trading can amplify market moves, it doesn't provide sustainable support. Institutions have been heavily investing in SoFi, differentiating it from other growth stocks. This institutional buying has driven SoFi's impressive run. Looking at call options, there's consensus for the stock to be above $8 by the end of the week, with significant open interest at various strike prices.
If SoFi closes above $8 by Friday,
it could trigger a gamma squeeze due to the high open interest in call options. However, market makers in shorts will likely try to prevent this. If SoFi manages to stay above $7.50, it would still be a positive outcome. Currently, SoFi is trading between its R2 and R3 levels, with strong support at $7.50. The resistance at $7.97 was briefly broken, but seems to have been influenced by algorithmic trading and shorting rather than organic buying. Despite today's pullback, the overall outlook for SoFi remains optimistic. The stock has been on a hot streak, and as we've seen before, whenever SoFi becomes overbought, it tends to pull back at the first sign of weakness. Today's consolidation is healthy, but if SoFi drops below its 50-day moving average around $7, it could be concerning. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.